Hello and welcome to Session 9 of our Series 7 exam overviews brought to you by Passing Score. You can find us at passingscorefinance.com. In this video, we'll be going over client accounts and the issues broker-dealers have to deal with, including trading authorizations, suitability, and fees charged. Let's start with the basic ownership types. There's the individual, joint for 2 or more people, and corporate, which requires a corporate resolution on file and specifying who's authorized to transact on the account on behalf of the corporation. In addition, there's plenty of other ownership types, including for partners. Partnership agreement must be kept on file. Fiduciary accounts, in which the client is acting on the behalf of another individual, and the documentation for that has to be kept on file. Incompetents also require a fiduciary to act on their behalf, and minors who are not allowed to open accounts at all. Joint accounts come in 2 varieties. There's joint tenants with rights of survivorship. This is essentially where 2 clients each have 100% ownership of the assets in the account. That is, if one of them passes away, the other one has ownership and there's no need to transfer any of the assets to an estate or any other transaction. A tenants in common joint account, it does have proportional ownership, so it can be split 50-50, 70-30, 80-20, any kind of breakdown. And if one of the customers dies, their proportion of ownership goes to their estate, not to the other joint account holder. Minors have accounts which they can hold with a custodian, so not on their own, but someone has to be in charge of the account for them. The income under the account does go to the Social Security number of the minor, and the account is over when the minor reaches majority age. The other type is a UTMA, which is a new legal format in which minors can hold accounts, again with custodians. Trading authorizations are allowing the broker-dealer or someone to trade on behalf of the client. A limited authorization is for just buying and selling securities. A full authorization includes cash and securities withdrawals, just about everything you can do on an account with a full authorization. These do require a power of attorney to allow a third party to transact on the accounts. Fiduciaries, minors, or incompetents may not grant trading authorizations. In any case, the trades have to be suitable for the client and the accounts, so they can't be beyond their ability to pay. They can't involve too much activity in excess of what's needed to maintain the account's goals, and they can't be for unsuitable mutual funds or investments that don't make sense for the goals and objectives of the client. COD is the way in which securities are paid for once they're settled. So they can be either DVP, in which the custodian bank pays when the security is delivered, or RVP, in which the dealer makes the payment and receives the security for the client's trades. In the case of customer death, the account is marked as deceased. Any open orders are canceled, the assets are frozen. Basically, the account is shut down until the estate of the executor or administrator can come forward and manage the account from there. Statements must be provided to clients. They must be quarterly for inactive accounts, or monthly if there is activity. They have to show their account balances, any types of transactions at all actually in the accounts must be disclosed. Sometimes clients may move their account from one broker-dealer firm to another. The original firm is known as the carrying firm, and the new firm is the receiving firm. The receiving firm first gets instructions from the client, which then they submit as a transfer request to the original or carrying firm, which takes 1 day to validate, or if they have any problem with it, take exception to. And there are 3 business days to complete the transfer. Sometimes there are assets that are not transferable for whatever reason, and the instructions have to specify as to what should be done with those assets. Confirmations for trades have to have these 4 pieces of information. by the completion or the settlement date. In addition, if it's a margin account, these extra 5 pieces of information need to be provided as well, including the capacity in which the broker-dealer acted in, either as the agent on a trade or the principal dealing with their own risk and inventory for the trade. Bond confirmations have separate information that they need to provide, such as yields, maturities, and bond types, which aren't relevant to other types of securities. The markups and commissions charged for securities have to be some kind of reasonable, have to have some kind of reasonable basis. And we saw this in a prior video where we talked about the 5% rule, which is a general commission charge for straightforward, vanilla kind of trades. Fees for securities can either be charged as a commission, which is that charge for executing a trade, or priced built into the price of the security as a markup. So if the broker-dealer has it in inventory, they're just charging an extra price on top of what they paid as their profit. In any case, the pricing, as we said, must be fair and reasonable, and the most relevant factors are having to do with the market price, any types of related expenses to complete the transaction, and some reasonable profit for the broker-dealer. That's it for our customer account section of our Series 7 exam overviews. If you have any questions, please feel free to email me at john@passingscorefinance.com, and good luck on your exam.